Okay, how are we going there, guys? Can you hear me clearly? G'day, Brent. Make sure I'm coming through loud and clear before I get rip into it. I guess I know there's a bit of a lag there, guys. Sorry about that. Gary, how are you, mate? All right, let's get going then. All ears, Roden. Me too. All ears and one big nose. G'day, Paul. All right. Welcome to TradeSetup, guys. Anyone that's new, welcome to. On the screen now, you can see us. That's the TradeSetup logo, I guess. So it's looking nice and pretty. In the top left-hand corner, you'll see us on Twitter. Join us on Twitter. Join us on Facebook if you want. Not much different on Facebook, though. We don't use that as much. We sort of go through Twitter quite a bit, which is good. Bottom right, subscribe to us on YouTube. So probably Twitter and YouTube, the most important ones, for a bit of information from us. Anyway, g'day, Bobby. Good to see you on, mate. I've got to speak to you later. Anyway, I'm going to reply to your email, by the way. I'm a bit slack. Yeah, anyone that's new, remember too, the general advice warning on the screen there. We don't give personal advice. We don't know anyone's situations or anything like that. All we're doing is talking from our point of view, what we see on the charts. Yeah, and what we believe is good and bad, just from our style of trading. But yeah, let's get into it then. So we had the Dow. It was actually looking like it was going to be down, I think, last night. When I was looking at it this morning about 6:30, I think it was, 7 o'clock. I beat you up out of bed, I think, Helen. Yeah, so early hours of the morning, they were looking at both a bit negative. I think they did open down at one stage. The Dow has opened at, I think it's 1:30 a.m. our time. Is opened down and pushed down about 400 points. And then pretty much spent the rest of the session just grinding higher, building higher lows, intraday anyway. And I think it only ended up down, what was it down? Can't quite remember, but the S&P ended up positive. So I think the Dow was down a few points and the S&P was up a few points. So they sort of come back to break even. I don't know exactly what the Dow's doing now. We'll have a look at that, see what the futures are doing after market. Again, it's the tariff concern, and then you've got, I don't know who his name, the advisor, C-O-H-N Cone that resigned. A bit of a spat over the tariffs as Trump's come out and said they're going to impose tariffs on aluminium and steel, I think it was. He didn't obviously like it. They think there's going to be more damage done to the US economy than anything else. And of course, you've got a bit of a trade war. So that's what's concerning the markets. But maybe they took it in their stride last night. The trade deficit blew out a little bit more in the US, which is going to become more and more of a concern if they're going to cut back on some of the income from taxes to pay down that debt, obviously, or they just keep printing money. Yeah, so they've got a few little concerns over there, but there's still inflationary pressures, gearing up for interest rate rises, all that sort of thing, which probably should crimp the market a bit as well. But yeah, we'll see how that goes in the US in the coming days. Big numbers out, was it tomorrow night? Employment data out tomorrow night. It's the first Friday of every month, which is... Is it the first or second Friday? That would be the second Friday, wouldn't it, tomorrow? Which is unusual. I think it's generally the first Friday of every month, I think, unless it comes on the first or second. They just pop it back a month. Pop it back anyway. Plus it was a shortened month last month, wasn't it? Yeah. So that's US payrolls out tomorrow night, which I think they'll sort of be gearing up towards that, just to see how that pops out. That'll be at 12:30 tomorrow night, Melbourne time, Sydney time. So for all you Queenslanders, that means 11:30, doesn't it? So just keep an eye on that tonight. Today, let's get into our market. We did pop up. SPY didn't do too bad last night. It held the lows and it built an inside low, a higher low overnight during the European session and pushed up. So it finished up from where it closed at 4 o'clock or 4:30 on the futures. From where the ASX closed at 10 past 4, the futures market had pushed higher. So didn't do too bad. Made us open up around the 30-point mark. We're up at 35 at the moment after seeing some selling pressure yesterday, which was pretty much on the back of the advisor resigning. And just obviously it's the uncertainty of everything. You add that to the overall picture of inflation uncertainty, bonds, I mean, the US, the 10 years are still ticking higher, so that's something to keep an eye on. Is that going to drag in? I mean, if we have some really strong numbers on Friday, you'll probably find the bond yields will spike, and they're not far below that 3% mark. Let's just get a look at that while we're talking about it, if I can find out where they are. Whoever gave me that code, thank you very much. I don't really need that. I need the 30-minute chart there. All right, so it did this little spike up on the yield price, 294, got to just a touch below that 3% level. It's been holding some lower highs, lower low here, but it looks like you can see the pressure. Looks potentially, it's this grindy action just in here. Just expand that. Which is this action here. It's a bit different. So you got a high here, it's bang straight down, reacted pretty strong, and then you got that secondary reaction lower, and then we've got this grind higher, and then we're trying to go low, but the pullbacks are really shallow, and you know they've got a lower high here, a lower low, but it's all within context of this recent move. So to me, that looks like it's going to grind higher. So it could be prepping for tomorrow night. So just keep an eye on that if you're trading overnight. If you know, again, with your equity positions and things, I mean, I'm not saying what to do, but I wouldn't be loading up too heavy just yet until we come out of the woods a bit more. But yeah, I mean, that could cause a bit of havoc tomorrow night. We'll just have to see how that plays out, especially if the numbers come out stronger than expected. I mean, if they come out weaker than expected, that's probably going to take... It's all about that fourth rate rise. You know, a lot of you know, not three, they're pretty much factored in three, but it's the unknown fourth that could... Look, we'll see how that goes, whether it's going to... if interest rates... if inflation gets out of hand in the US a bit more than expected, then they're probably gearing up for a fourth. And it's all got to do with the new Fed Reserve chairman. I don't even remember what his name is, but he could be a bit more aggressive than the previous. And I can't remember her name. But anyway, let's take a look at the XJR. Let's just look at some... So that's the Dow. No, that's the S&P. That is last night. I'm just going to make sure that's on 7th. Yeah, I think that's the last previous session. Dow, slightly lower, open lower, rejected these lows. If you can see that, this candle rejected and actually finished up for the session, but it finished down from where it closed yesterday. So wasn't a bad result all in all. If you can see, you've got the market rolling over, did pop up, pull back, just flushing out this previous low. And we'll just see if it breaks up above 25 again, then you've got an inside bid zone. We're holding some higher lows. We're going to push up through 25, and that should lead you to push right up to 25,750, even beyond that. But if we hold below 25 and we start to roll over, then I would suggest we can take out this 24,250 and test somewhere down there, or even head south a bit more and we get this secondary leg from there from highs to low up here to lows down here at 23,360. We get that secondary push. So if you just measure that out, like we normally say, high to low, high here, somewhere below 23, 22,750. So it could be a long way. I mean, it could be done in one session. Could be done Friday, the way they go. But yeah, there could be some legs to the downside still. I mean, all in all, you can see the stochastics, the way the way I look at stochastics, the pressure of the move down, overbought to oversold down here, overbought to oversold, heavy selling pressure, big move. You've got a good move up from oversold to overbought, so it's good buying pressure. Couldn't get anywhere near these highs. But the same token, we've got some further good selling pressure. So the willingness of selling, but it's getting soaked up in by buyers. When you go from overbought to oversold, you can see down around that 20 mark, we're not getting down towards those lows. So those lows are not coming under pressure, which would suggest that buyers are stepping in at higher prices, starting to edge back into the stock market, starting to edge back into equities. So at the moment, I mean, I've done a lot of just looking around. There's a few people we follow over in the US, I follow anyway, just on Twitter, on bits and pieces. And you're at that stage now where it's an each way bet. I mean, to me, the probability is not high either way just at the moment. I mean, smaller pictures are saying down, some large, medium-term pictures are saying up, larger pictures saying sort of a bit mixed. So it's that's why I'm not too concerned about being fully into the market right now. Oh, that's not intraday. I don't want that. I want that. Dow, FTSE. Yeah, washed out those lows. That's not looking as good as the others, but we are. Look at the stochastics. We're extended on the downside just down here. This little push down took quite a bit of effort just to flush out the lows slightly. So we'll just have to see how that goes. DAX a bit along the same lines. I mean, don't forget, FTSE's still got Brexit to concern with, so they could be doing. The US could pop back up, we could pop up, DAX could pop up, and they could just be sort of banging around, doing nothing until we get more news on Brexit and how that's going to affect them. XJO, yeah, big move down yesterday. Good bounce off that 59 a couple of days ago. Popped straight back down again, so down to that zone, sort of just rejecting that now today. So it'd be interesting to see if we can chop around for a couple more days and start to pick up back up through 59.75 again. I think that's going to depend on obviously what the Dow's doing, what happens in the US with the the interest rates, what's going on with tariffs, all these sorts of things. So there's still a lot of things to digest. So yeah, I'm not too concerned that people are not diving back into the market. Again, what we're seeing, because there's a bit of uncertainty, that push down is quite heavy. You can see from overbought to oversold. Again, a bit like the US, we're probably around 50% of this move up, probably a bit over 50% retracement of that move up when we got to. So the sellers have really given it a good nudge, but couldn't get too far. Unlike this move going from not even overbought to not even oversold, that big thumping down there. That's when a lot of selling come into the market. So the way I interpret that sort of thing is when heavy selling comes in the market, you get this big expansion lower. It means there's a lot of people getting out of the market, a lot of people running for cover. And when you get this secondary leg of selling, there's not as many people loaded up on some longer terms, longer term buy positions, if that makes sense. So it just means we're flushed out of the market quite a bit. I would expect. Again, we don't know what's going to happen going down the track, and we're sort of in that zone where we go either way. You can see the moving averages are slowly rolling over. They could expand to the downside. We could attack this 5.8 all the way back down to 56.75 or that 56.50 zone. We don't know. Or we could just hold up, start to contract. Could take a fair bit of time. Hold lower highs, but hold higher lows, and then start to break out to the top side and continue that longer term weekly trend high that we spoke about quite a bit. This trend high. I mean, that hasn't broken yet. So again, we're at that stage now. There's always going to be contraction in the market, and contraction's hard to negate. You've really got to be on the ball, I guess. It's just a matter of keeping an eye on what's happening in the market, keeping an eye on the news, what's triggering the news, what's triggering the sell-off in the US. Is it overextended over there? What's happening over here? Keep all these things in mind. Yeah. So I'm sort of leaning. I'm still leaning that we're going to contract a bit in here. We're going to hold some high lows. We're going to hold this longer term trend, edging down, and then we're going to start to lift again. As soon as we see a key high low like we saw back here, it's a really good sign that the selling's out of the market. So this contraction, what we call complex correction. I just want to see if I can drill in on that. This complex correction lower is defined by lower highs, lower lows. You've got that all the way down. A lower high here, then just push down to make a lower low. When you get this sort of move, it's popped up. That should continue, should take out, technically hold another lower high. Technically should take out that low. When you start turning, and if you break it down, this is a weekly chart. If you drop down to the daily, and if you start seeing some buy signals on the daily, that suggests that you're going to hold that as a higher low, and we're going to start to push back up. And as soon as you break through this level, this high, 52.16, that's confirmation that this complex correction we're on the right side of it now. We're not on the wrong side. The wrong side means when the market's moving down. When it looks like it's pushing back up again, that's when you'd have more confidence to start to edging into some good long positions and really start to take some serious long positions on that. And that's what's happened. It did play out. We got this is on the elections when it touched down. That still held that trend, held the anchor level to the uptrend, and then continued bang straight back up, pull back, consolidate here, push through the highs. Moment we're pulling back, we're maybe correcting, maybe a complex correction, or maybe just a minor correction. We might get a bit of contraction. Not so much this action, I wouldn't suggest. We could go sideways and then pop up, but either way, it's going to take some time. Nothing like this. Just remember, nothing. When you get this sort of savage move down to wash out the market, I guess that the smart money is not going to dive straight back in again. because you go, everyone's going to be in the back of their memory, in the back of their mind, that they've just been hurt, maybe. They've been cut out of some positions. When we got cut out, it stopped out of some. So that's going to be fresh in your mind. You're going to be a bit more tentative when you're getting back in, because you don't want to take any more, take too much risk, and you don't want to take any more stop outs to hurt your overall balance. You're going to wait for a bit more confirmation in the market. That's why, I'm edging towards really waiting to see this market play out a bit more. But anyway, I hope you all agree with me, but if you don't, too bad. All right, let's just get into it. What was I going to talk about today? I just want to go over a few things. Any questions just on what we're looking at? You're long the XJO. Good work, Brent. I haven't even looked at it today, to be honest. I had a bit of trading on the Aussie yesterday. I was long short. Short made something, got stopped out of the next short, and made it all back plus more on the long. Made some on the... Actually made a long on the ASX yesterday on the SPY. When we had a bounce, a 10-point bounce, I think I pulled out 9, which was nice. And then it rolled over and crapped itself after that. So, nothing today. I'm really just trying to focus on some stocks. What I want to chat about today, before we get into it too much. Well, look, I'll just go over what couple of positions we got. APT, grinding higher. I can't remember where we got in on that one. 740? 740 on APT, and it's up at 770, 769 at the moment. I want to see that pop through at 8. I don't want to get caught when it pulls back from here again, like we did on WHA. Missed out on a profit, half a partial exit, and got stopped out. It's a bummer, and it's actually bounced again now. So APT, we're long on that. Just want to see that keep grinding higher. I mean, it's got a lot of room to move. You can see it's not getting into overbought territory yet, so it's not getting extended. So that would suggest that it could easily push up through 8, extend up through 8, and then we'll look for a partial. And on the weekly, it's still, we're just rolling up on the weekly too, don't forget. So the weekly could have a lot of room to move on the upside. It could just keep grinding its way higher. RSG, it's starting to kick off. We got a pop through 121. We got it set yesterday. Yesterday. Set on this one yesterday, and it didn't do too much for the rest of the session. We did end up spend a lot of time in negative territory on that trade, and then it's popped up into the close, and then again today it's pushed up higher. Longer term, I like this because you can see that's had a good push up. You've got that correction lower, washed out a lot of these late buyers. They've tried to have another go. That's cleaned them back out again, but it's been holding this $1 level, and it's only really... This here is a high low on the weekly basis, if you can see. And we just confirmed that high low at 102 with that push through 121. So I like this one. I want to see if that one can get on. It's more the weekly. Obviously, I think we're going to come up into 130, which may be a bit of a reaction zone. We may blow straight through it and then start edging higher. And then you'd want to see, if we get through it, that 130, which is somewhere up here. If we can just take... Actually, let's just go here. Let's look at it here. Oh, there it is. Push up through 130. Extend through it, which would be nice. Stochastics get further overbought. It extends through 130. That would be nice, because then you'd probably expect it to correct a bit lower, then hold another higher low, and then go again. But if it hits 130 and backs off straight away, I'm going to be thinking twice about that one. But I still think it's got a lot of legs on the upside, RSG. So that's it. That's all we're holding at the moment. We've only got one other that we're looking at, and I've got one that I was going to alert as a bit of a heads up. I might be alerting this one. Probably not now. I was going to buy that just before at 25.5. But that's starting to go. But that looks nice. We'll see what happens after the stream if we can hold that. But you can see it's pretty much, it's prime what we normally look at. You've got this move up, end of last year. Big washout, flushed them out, 50% retracement there. So anyone that's a Fibonacci master, know what we're talking about. 50% retracement, which is good. Had another crack at the highs. Couldn't get up there. I mean, that's an extended move up, you can see. Washed out a lot of these late buys in the trade. If they've held on for dear life, they're still holding on now. Got a few more people long up here and cleaned them back out again. So the whole time, though, it's been holding higher lows. Had a bit of a clean out here. Higher low, major high low around 18. And then we're starting to lift again. So we're starting to squeeze out maybe some of these sellers there. Or just start to drag in some more buys. We held another higher low around that 22, and we're just on the rise now. So this could be one that could really get a bit of a move on. if we get up to 30 over the next few days and extend. And if it's going to extend through 30, measure this leg up. If you're going to get long, measure the leg from about 4 up to say 30, for example, 26 points. Measure it from about 16, what do we got there, 30, 42? 42, or somewhere around 40. So it's got risk reward. It's looking quite good. If that's what's going to play out, if it's going to start extending those high and start whacking and really accelerate up, that's what we'll be looking for on this one. Enough of that. Any questions just on that, guys? I just want to go over, I want to talk today, I thought I'd just touch on entries. I think I've seen over the last probably couple of weeks, you know, a lot of chat, what we're talking about, a few people talking on our forum that we've got. It's always good to say what you think of the market, what we're seeing, but it's also very important to know what your entries are. It's pretty easy looking back in hindsight and say, I would have taken that, would have taken that. That's conforming to my trend, that's conforming to my plan. But when you're looking at it real time, entries, I believe, are the make or break for trading. And if you don't have some sort of entry plan in place, where you might only have 1 or 2 entries that you like, you might have 3 or 4. So firstly, defining the market. It doesn't matter what you use. I mean, in all honesty, I'm not a Gann fan. I'm not a Fibonacci fan. I'm not really anything. I like price action. For me, that's, you know, the reaction on the action between buyers and sellers. That's what I like to look at. And that's what I understand clearly. I mean, everything else to me, yeah, it works. Everything has its place. It doesn't say, what I'm trying to say is it doesn't matter what you use, how you trade, what suits you. It does not matter. If it suits you, it suits you. That's great. But it always comes down to entries. You've got to have some pre-planned entries and what you want to see in the market. And you've got to have them defined. So you might have a couple, you might have 3 or 4, and how you trade them off what you're looking at or your defined plan for the market. So we were just discussing this one. So my plan with my price action, I don't care what it's doing. I don't care where it's going. I mean, what I'm looking at is my entries. This one's popped up. We just explained all that. If I just drill down on that. So I can see what sort of price action I'm seeing. So I'm seeing that bias to the upside. You can see that MA is contracted in. Now they're starting to slowly expand again. So for me, my entry would have been through 25, say 25.5 entry, which was just before the stream. It was trading offered at that price. Just popped up a cent now. So that could have been a nice little entry. So from here, I know exactly what my risk is. My risk could be, I mean, you could widen it below this major high or low, say below 18, but I'm happy just to widen it, say have it around 21. So 25.5 entry, say 21 risk. And if it comes back down, so for me, what I'm seeing here, this should extend to the upside. We should start targeting 30 as it drags in more buyers. We should start extending because it's holding higher lows. Higher lows meaning buyers are stepping in at higher prices. They're happy to accept higher prices because they're positive on the stock, are positive on the move. So they're paying up for it, as opposed to when you're heading south here, you're holding lower highs and you're pushing down. Buyers, you know, if you really do want to get in, you could probably potentially, that's what they do. When you get a lower low, they're just pulling back on their bid. They're pulling back on their bid. They're not quite willing to load up just yet, or they might be buying a part of their overall position. They're edging into the market slowly. So this type of thing, when you push up, if you're really positive on this longer term, and you might have 100 grand to get in, you could get in 10 here. Okay, it goes just to see that, to make sure that you're in, and then you might get in 10 here on any sort of a pullback. And then, but once it starts to ram up and you start holding higher lows, you know, as a pro trader with a bigger position, you'd want to make sure that you're getting fully loaded there, and you've got all the exposure onto the trade that you want. But again, I don't trade exactly like that. I just trade one position in one hit, as long as there's enough liquidity there. And I like to see these sorts of entries because for me, that's where you're going from contraction, when the market's contracting, when it's undecided between buyers and sellers. So when it's expanding, it doesn't matter if it's expanding up or it's expanding down. It's a definite bias towards the market, whether it's buyers or sellers. Expanding up means it's coming out of contraction where there's indecisiveness. When it's expanding, buyers are taking control. If it's contracting in, now it's pushed down and it's going up, it's contracting back up, where higher highs, higher lows, lower highs, and then it starts heading south again. It goes back into expansion, meaning that sellers are taking control, and there's a definite bias to the direction. So here, when we start to get some lower highs broken, like just in here, that lower high has been broken, that means there's a bias starting to form to the market. It's starting to go into expansion, and then we're looking for an entry. So it's pretty clear cut. So for me, I mean, we always talk about these entries. I think we'll just go over some, I think, on the Aussie, just to go into it a bit further, if I can find it. So like I said, it doesn't matter what you do, in my opinion, but you've really got to know exactly what your entries are. As a bit of this is what I was talking about on the Aussie. So yesterday, about this time is when I started looking. I was looking at the Aussie through here. I was looking at it in here, and obviously when you see this type of move, to me that's contraction. Even though it's slightly, we're still holding the anchor. And for me, the key level was, I just want to draw that up. The key level at that stage was just in there. So you've got this bounce here. You've cleared out a lot of these long buys, long positions. You know, you've got the markets, it's contracted down here and it's expanded up. Done a lot of contraction. It cleaned out a few with this little pop up, and then boom, straight back down. And that was over the news, but that's quite an extended move down. You look at most of the charts. I think this is a 5-minute chart. Look at the 30, the hour, whatever. Expanded to the downside, so it's cleaned out a lot of late buys. But the overall bias, I think, to the market is actually still up. Does that make sense? So at this stage, what I'm looking for, I know that's had good push down. Tried to go back up again, bang, straight back down again. So that's cleaned out a lot of buys. So the market's starting to reset. We've had that pop up and we've corrected, but we're holding above this anchor level. I was actually selling it. I made one profitable trade in here off the minute time frame, only a small scalp. And then I got stopped out on the second one. I was actually expecting at least a pop down to, because the market does that a lot. It'll look prime for a pop up and it will set up. So I was going off the edges of the market, if that makes sense. I'll just let you know. Segment, that's it. So I had that in place at that stage when it was popping up to there, starting to hold on the minute time frame. I was selling it, made a little pop down here, made some money, but then I think I got it. I chased it down a bit, which was stupid in hindsight. I think I chased it down on this candle. So I think I originally sold it here or here. One of these two little pops. Made some cash in here. When it popped back up, I wasn't in, but I chased it when it broke through this little low and it didn't go much further. Pretty much got about 2 pips in profit, and then I was behind the 8 ball most of the time. But at that stage, in the back of my mind, I knew that there was a chance that I was expecting it to pop down to support at 77.96. It didn't play out like that, and I was starting to hold through this zone through, was it, say 77.99, 98. It was starting to hold through there, and I thought, okay, if this is going to go back into expansion, it could easily expand higher, clean out the most recent high, which it did in hindsight. So at that stage when I was flat, it popped up on here, started expanding higher, went long, made it all back plus a bit more on the way back up again. So I just want to show you the entries of what it is down on. I know it's on the minute chart, but just trying to get your bias, your plan for the market, where you are, and you're just really looking for entries. And if I can get that on the minute chart, I just want to plug through different entries. Oh, here we go. Stop. That was down here, wasn't it? We'll get rid of that. All right, so you can see here it was just starting to hold up. And once we got this high low here, you can see that little, it's like a cup, you'd call it. It was starting to expand. As soon as we got this little pop up here, I think I bought into it on this pullback here, and then it took off. So you can see, the thing about this, it's held up through this key anchor level at 77.96, held a higher low through here as well. It's about 77.90, 77.88, I think it was. 77.98, sorry. And you spent a lot of time. A lot of that is just been dragging in sellers like myself, essentially, at the start, just dragging in those sellers, dragging them in. And then you know that sooner or later, if the market turns on them, it's going to squeeze them back out, and you're probably at least heading to those highs as they chase it up. And not only get these people start to get stopped out, expecting another big rollover lower, potentially tracking down to these lows at 77.75, selling through here. As they get squeezed back out, they're chasing their tail back up again. And you'll also find that there's going to be fresh buying to expand that market higher. And when you get it right, you're going to know pretty quickly. Okay, so from here, I know I've got a picture in my head what I think is going to happen. I'm trading around that picture, but the most important thing is trading off an entry. And if we can just, is this making sense to you guys? I just want to touch on this because I think entries are the most important. Like I said before, it's make or break with your trading. It is pointless picking the market in either direction, especially if you're looking at hindsight. So that was my setup. Okay, I've got a double top here. My setup was here. But if you can't trade it, you know, that was your entry. If you can't actually trade it from a setup real time, it's kind of pointless. So that was a setup through here. Does that make sense to you guys? Just let me know. I just want to go through it. There's quite a few here. If we can mark them up, we've got, get rid of that. There's another entry in here. You can see it sort of conforms to the same type of scenario. You've got contraction lower. You still got this key level holding, and probably at that stage, that was your key support zone. Trending down to that key support, then you started holding some higher lows. And when you get this press up at a contraction, off we go. You can see that's a nice little entry. You got that expansion higher. Again, you know when you're right because it kicks on pretty hard. Through here, we probably got a nice little entry in here. That's the same style of entry of what we've just seen off the contraction lower. Again, it's come back down to that same point. And until that's broken, your bias has still got to be to the upside. And when the market expands high, it's contracted all the way back down again. It's not a very strong sign. But then again, you know that there's been a lot of sellers in here. They've been selling off this high, maybe selling it off this high. Whatever their reasons are for selling, they're pushing it down. They're going to potentially get squeezed out when you get this high low. So that's a failure of that downtrend, failure to continue lower. And that's confirmed when you get a push up. You can either go through here, 78.05, or through the highs, 78.07, and with your risk just below that, and just see if you can get it back up to the highs again. So the beautiful little entries there. Off the highs, I mean, I wouldn't be biased because I'm still biased long at that stage. There's probably nothing, I don't see anything too strong in here. Even in here, I don't quite see that as a prime entry for me because to me, that's not really contraction. It's too choppy. I don't like that sort of choppiness. And even these swings are too wide for me. I don't like this kind of area just to buy off in an overextended amount. There's nothing there to say to me to buy it just yet. So, and then of course you saw it when it started getting a bit choppy, it spiked up and then just collapsed after that. And it actually did wash out that support zone through here. All right, does that make sense, you guys? Probably if I can go back a step, this is, I just want to touch on this one. This is actually, if you can see, it's not going to turn out too well. Is that the minute chart or the 5? There was probably an entry there, except it was early hours of the morning. It was just after 8 o'clock, so I don't technically trade that. But you can see the market's expanded up. It's pulled back. It's washed out a lot of these late buyers. But then it started to go sideways. It was holding higher lows, holding lower highs. Well, if I can draw that up. So you can see it was still holding in here. So technically that was a bit of a buy entry, a pop up through these highs, probably about 78.21. You did get something out of it up to 28, but you really got to be on the ball. As soon as you saw that double top through here, it probably would have led me to believe, especially after this little pullback here, deep correction, pop back up, retest and start to fail, you'd want to be out of that pretty quick. So don't forget, guys, this is all intraday trading, but this style of setup, what we've spoken about here, from contraction to expansion, we've spoken about many times. Here's another perfect, here's another perfect little entry signal. There's probably a bit of a tougher one to trade. You've got, I'll go through that one because I think that's actually quite good. So you can see the market's expanded, corrected lower. This break here is a bit of a heads up. Even though it did come back down and wash out that support zone, it did wash it out, really wasn't going anywhere. And then it started to lift again. And then you're back above that trend line. It's starting to holding a high low through here. And then you've got potentially an entry. It's a very aggressive entry. I like it off those little high lows. We call them shoulders. I love that style of trading. Or you've got something with a bit more confirmation through that high there. And your risk is going to be, so you can have really tight risk with a breakthrough there. But that's an inside continuation, which we've spoken about before. And that's pushing up you're ideally going to push up out of that contraction or that consolidation through there. And you can see it's fitting quite nicely. It's holding that higher low. So this one here is an anticipation that we're going to hold this as a key higher low off the push down or out of contraction. We're holding that higher low here. That's an anticipation we're going to hold that. And you got your risk is, what's that? That's 77.67 down to 64. So it's only a 3 or 4 pip stop. That's bugger all on the Aussie. And look at the payout. When it pays out, when it starts to expand, I mean, this is all in hindsight, I know that. But the structure's there in place, and this is the exact thing that we're looking for time and time again. All you're trying to do is set up your entry setups. You're trying to plan your trade. So you've got your system, whatever that is. I mean, it's irrelevant to say what it is. Everyone's got their own style of trading, their own system that they're looking at. You're planning your trade. Once you see that, it's all about the entry, and you've got to have some style of entry that suits you. This suits me. There's another style of entry that I do use, but not as common, because if you didn't notice, I flick between timeframes quite a bit. Rather, I would like to stick to this same style of entry. Looking at the 5 minute, I can drop it down to a 1, and that would be a cleaner setup. And then you know exactly where your risk is going to be. I know the probability of the setups I do, that I take, and I know that if they go into expansion, I should find out pretty quickly. And this one was a prime example of when you do find out, bang, it goes straight up. You don't really get much of a chance to stuff it up. A bit of correction there, you can sit through that quite easily, and then it's expanded higher again. You can see that, that's probably 10 to 1 trade. So it turned out quite well. I mean, I know that, again, this is in hindsight, but that is the entry that I'm looking for. And when I get it with respect to this kind of price action or this price structure, even if you change that, if you go to there, that's probably making more sense. That's what I'm looking for in the way of price action. So the bigger time frame is holding, the bigger time frame is up. This is contraction on a bigger time frame. I'm dropping down a time frame to find out for my entry, which is just in here. Everything's planned out nicely. I've got to respect my entry setups. I have to respect them, trust that it's going to work out, and if it doesn't work out, so be it. On we go. We move on to something else. Like my shorts before. Where were we? My shorts through here. It wasn't quite working out. That wasn't prime entry. This was more of a prime entry for me. Does that make sense, guys? Just a bit of I thought I'd discuss that because I think it's quite important. I mean, you can go through, spend some time on the charts and just mark it up. Mark up what you're seeing, but mark up the price action like we did here. When do you see higher lows, lower highs? Is it a bit of a squeeze? You know the market's squeezing in on itself. It's contracting in on itself. If it's contracting lower and the longer time frame is up, you know that it's going to go back into expansion sooner or later. And you're just looking for that little entry setup's going to kick off for you. If you're range trading, you're trading off the edges. Again, if I'm looking for a sell, say off this double top, if we can drill down that. So this is another style of entry. I mean, just forget about which way the market's going off. If this is a range, say we're stuck within a range here. I'll draw it up, actually. Let's draw it up here. I just want to show another. Anyone knows that Davin and I mean, Davin's really good at it, but he's always talked about if you're trading off the edges, we trade off shoulder trades. And what we mean by shoulder is if the market's coming down here, it's pressing into a support zone, you've identified that as a support zone, you might get a washout here and then you get it lifting. What we're looking for is that kind of thing, a higher low. And then we're looking for these sellers that have pushed it down here to get squeezed back out of the market. We don't know where it's going to go to. And that's where you start lining up what resistance, what reaction zones we're going to come into. Is it going to prove too strong to get through? Too much resistance? And then, okay, we close it out. If it keeps extending through, we follow it up. And if you trade, so that's one way to trade along on the long side. And if you're coming up into a resistance zone, for example, higher highs, higher lows, we might wash that out, have a deep correction, and then you're starting to struggle up here. You can see, and you get your lower highs come into play. That's broken that. It's formed a lower high here. You can potentially take a short sell, and then again, that could be a range that you're trading from top to bottom or bottom to top. On the short side from top to bottom to top on the long side. It's coming up to your identified resistance zone. You're trading off a shoulder, what we call a shoulder. When the sellers starting to come into the market at that zone, and if they're coming into the market, they might be sellers that have bought it all the way up here. They're starting to lock in some profits. You don't know how far that's going to go. You know that sooner or later sellers that have just, sorry, the buyers up here, right up towards that resistance zone, are going to get the first to get squeezed out. Maybe there's some in here that are going to get squeezed out too. And then you got these late guys, so the early guys potentially getting squeezed out. So you got a whole bunch of them that could get squeezed out and the market can head south. So really from there, entry could be through that low. You've got where your risk is, you know, and you're just managing your risk from there. Whether it starts bouncing off there and chopping around and then starts holding, well, if we can get that drawn properly, starts holding a higher low, you'd be out just there. And you may take a small profit, but the bonus is if it punches through that support, it's on. Does that make sense, guys? So I know, I mean, it's just, again, it's just knowing what situation you're in the market, prepping your market, prepping whether it's a share, whether it's a, you know, your currency, it could be bonds, it could be anything. For me, this works. And I can do this on any market and I don't mind. So I'll sit there, prep up the markets, find out my levels, and then basically just sit there and watch the action until I get some sort of sign that you're going to go from contraction into expansion. Once we do that, whether I'm range trading, whether I'm a continuation trade, whether I'm going with the overall trend, it doesn't matter. It's a similar type of strategy, and I've got my setup that I like to see over and over again. But you have to have some sort of setup to be able to trade profitably. I hope that makes sense, guys. So enough of the sermon. We'll continue on. I've got something from Paul. He sent me a couple of emails. I've probably gone a bit too much into this, but sorry about that. I thought it was important. Yeah, don't want that, do I? Let's just minimize that. Minimize the Aussie. Paul was looking at, I've already forgotten, CBA and stochastics. I thought it was worth just touching on CBA, just to explain what I'm viewing this with the stochastics. I've got this on a daily. I'll flick over to a weekly. Now, what were you saying, Paul? I know CBA and VOC, okay. So CBA, he was saying they've got, was it next month, they're going to come out whether they're going to be fined or not. They don't know how much, but they have factored in a certain amount of $1 million, a certain amount of millions. Probably, was it 400 mil, you were saying? Where is your name? Paul, no, Paul here. 375 million they've already put aside for a fine, plus another 200 million in legal costs. That's amazing, isn't it? You get fined 375 million and you're paying 200 million in legal costs. Geez, we're in the wrong game, that's for sure. Any lawyers out there, well done. You're making good cash. Here we go. What am I trying to find here? There. All right. So basically what it's saying, if they do get fined, it all comes down to how much they may get fined. And you know, if they've got enough factored in. If they haven't got enough factored in, okay, the market's going to head south. But if they have, they get fined, say, less than 350, maybe 300 or so, you should expect this market to take off, or to at least pick up. And what we're seeing on the charts, and the way I would be viewing this, especially on a longer term basis, is, and the way I read with stochastics, market, again, it's just planning out, okay, we've got a high up here, we've got a key level through here, and I'd take that as a washout, because if it doesn't break it significantly, it's more of a washout. We just about got to that level, so especially when there's another level just up there, it can easily wash one, pop up to the other, and then roll over. Quite clearly, 70 zone is finding some support. And what I'm seeing here, we've got one lower high, lower low, popped up. We've potentially got another lower high, but well, you could argue that it's, I would say, when you're getting so close to the support around 73 on the weekly, you're getting so close to this support in here, you can argue that that's confirmed, that's a lower high that's confirmed, and you've got a bit of a washout there as well. So the way I'd see this, so I'd just mark up all this just to see what kind of a picture I'm drawing up. We're pressing down into that support zone, okay. The next thing I do, I pretty much look at my stochastics to get a picture of how much effort it's taken to get down there. Now, if you look at the stochastics, it's taken quite a bit of effort to get down there. So the sellers are given a good ramp. Unlike this situation, probably about here, we were coming into that overextended. We were getting there. We went a bit further, so there's no reason why we can't go a bit further, but you can see this green candle. We did react off that zone, and we spent a whole week bouncing off that zone. So that's the way I'm sort of reading this just at the moment. And if you take it across the highs, this could potentially be the early signs that we're breaking up, and this is going to hold support. So we've got a few different things lining up for me. We've got, we're coming down that support. We fell a bit shy of that before the market reacted up that week. We're oversold into that zone, so the pressure to get it back down is being quite hard, quite high. The buyers are soaking it up. They're soaking it up on the way down, obviously, and then they bought a bit more, reacted off that 73 zone. So for me, so far so good. We're starting to show signs that that's going to hold up, and that's in context to this high low. And this overall market really is just contracting lower. You can see that the market's contracting lower. It's taken quite a bit of time since started 2015. 2015 made this high, banged down, chopped around that base, tried to go up, straight back down again, but it's holding a higher low in here. So, you can see that, between 84 and say 70, 14 buck, it can easily spend a lot of time. It can spend the next 6 months to a year just chopping around, holding a high low here, popping back up, building a lower high, coming back down. So that's probably conducive of what the ASX is doing overall too, don't forget. But longer term, I'm more biased to the upside. I just think this is far from being, I think it's far from playing out just yet. If you go down to the daily charts, this is the weekly reaction off that 73 zone we just spoke about. So it's good to see that. Unlike this move through this low, that continuation through the low, there was really no reaction off there, no strong reaction. So that's where sellers were just taking control, banging it straight through. We've been an oversold when we got down here too, which is at slightly higher in this zone. So the pressure was, it's still trying to push it down to new lows. It's not getting there. It fell short of this low, couldn't break it, reacted up quite strong. It's pushed down, and it's potentially just starting to react up now. We don't know. And if it breaks up through 77 or this little lower high up here, then I'd suggest that that major 74, 73 zone is going to hold as a major higher low on your weeklies. And then we're just going to work our way back up. And then from there, it's okay, if that plays out, where are we going to go to? The first port of call is going to be up towards 81, 82. And then from there, you just really got to ride it and see what happens. But again, you can see the MAs are down. It's got a lot more contraction to do before I'd be willing to buy this just yet. Probably something like this. If you can see this type of entry just in here. The market's reacted up, tried to push down, built a high low in here and started reacting up. You've got still the highs holding, but high lows, buyers are stepping in, then you're just looking for that pump up. And from there, you're just trying to follow it to see how high you can go. But I hope that makes sense. So from there, longer term, I'm biased up on CBA. They've got a bit of news to get through. And I think Paul was saying at the end of the year, you've got Austrac decisions to be made or further towards the end of the year. So that would suggest that that weekly contraction is still going to play out, where it's just going to chop around for the rest of the year. But we'll see. So I hope that's making sense how we're viewing stochastics anyway. VAC, it's another one. I honestly wouldn't go near it just yet. But again, you got very early stages. If you look at it here, if you just went and look, we don't need this move up. Sorry, I don't want to do that now. I want to make this a bit better. If you just draw that up, build your picture. It's always about building your picture, don't forget, just to find out what levels. Okay, pretty clearly we've got a level through here. We've got lower highs still holding. Hasn't been broken yet. The most recent lower high is at 325. The market's pushed straight back down to that support at around 225. We could easily bang around through here. We could easily pop through and just continue down. We don't know. What's stochastic saying? It's saying that it's taken a lot of pressure to push it from 325 down to 225. It's well oversold. So if you were willing to sell it here, if you were looking to sell it here, what's the probability of this trade working out on the short side? I think it's very low. Okay, so that's what basically my process is going through my head, saying what's the probability of that going lower? Okay, it's very low. The probability of it going lower is low, if that makes sense. So I've got to add a probability to what I'm looking at here. So for me, what's the probability then? Probability it's got to break out. I would want to be a buyer, but it's nowhere near set up for me to be a buyer. If you can see, I want it to pop up here, then maybe contract a bit and then go. Then I'll get my entry. And again, it's exactly the same entry we've spoken about before. But I want to see the lower high broken first. Okay, and I want to see this hold. If this can hold, you can pop up, break that lower high through 325, maybe push to 425, pull back, and then you get another reaction back up off that zone. It doesn't matter where it is. Who cares if it pushes through Who cares if it falls short? If it falls short and builds a high low at 375, that's a stronger sign. Stronger sign that buyers are really starting to chase it. Happy to pay. They pay up a lot more. They're not waiting to get back to $3. They're not waiting to get to 325. They're paying up to 375 because they think potentially this is going to 6. It could go all the way back up to 925. Does that make sense to you guys? But that's the way I would view it. That's the way I'm planning. And again, right now, I'm not inclined to buy this at all because you can see these MAs are actually rolling over with this. It was quite a strong move down. But probability to buy it here, you could easily get stopped out. You can get washed. I mean, if you use stops, you can get washed out. If you don't use stops, you could be holding on this for the next year, doing nothing. And I'd suggest putting your money somewhere else, which is actually going to make money for you. I hope that makes sense, guys. Anyway, what was the other one? So we got some from Zhang. Good to see you remembered. I did forget, didn't I? We'll look at OGC, Oceania Gold. I think this is a bigger picture play here. So this is all the data. It's on a monthly chart. You can see, it floated here, pressed all the way down, screwed over a few people through 2008. Started 2000. That was a GFC, wasn't it? Yeah, that was through the GFC. Got cane through there. Great time to float, wasn't it? Got hit hard there. Lifted up like everything else at that stage. Pushed down. Built a lower high. Cleaned out these lows. But in context of this low here, I was still holding. So you've got. I just want to draw this up in a long picture. And again, we're just building the picture. What's the longer term? Pop up, pull back. That's washed out a few more people with a break through these lows. In context of that, we built a higher low, and we built a higher low when we got confirmation it's pressed up back up here. Ideally, this is probably where you'd want to get in. You can see when the market is still holding higher lows and lower highs, you know that it's going to break sooner or later. And you can see longer term, low here, higher low, higher low, higher low. So I'm betting to the upside. At this stage, I'll be betting to the upside. And of course, you got this little press up, and then you cleaned out the rest of the highs. And then what we've done up until about now, we've really just contracted back down again as the price of gold's gone down. You've gone from an overbought situation right down to an oversold situation, but we're potentially, I'll probably just draw that over that. Let me just draw in a different color. We're potentially at a beautiful, well, we're right back down in that support zone again. So if we go down to a lower time frame to check out what's just happening on the hard right edge of the chart, just remember we are on a support zone right here. I think I can draw it. I think it's about here. Yep, there you go. Bang. We've come down to that support. We've contracted lower. At this stage, there's nothing to say buy or sell. I'm edging towards a buy, and you can see if you look at, we've come down here, oversold down here, popped up, sellers took control, pushed it straight back down to support, went to oversold again. We popped up. The effort to get it back down to the same spot didn't take much effort, and buyers are starting to turn it around again. So from here, you reverse. That's buying pressure starting to kick in again. Buying pressure starting to lift it again. But really, I'd want to see it get up through here. I mean, even though you could easily just sit there and just bang around between, if you can understand, within that contraction zone. We could do that for the next 6 months to a year. All right, so there's nothing to say that to buy it just yet. Nothing for me to say buy it just yet. I think it's got a long way to go. And this is off the daily, isn't it? This is off the daily. Weekly. Let's go down the daily then, just see what it's saying. The only thing for it on the daily is we've got a little double, triple bottom through here. And we started to lift, retested that low, but we have not confirmed a break to the upside yet. And I really want to see a push up, a strong push up. I want to see everyone start to load up on the upside. And then I'll be looking for that pullback to build another high low. And then I want to buy into that pullback for an expansion to the upside again. But at the moment, we're far from it. I wouldn't be buying this just yet. I'll be letting everyone else buy it to take the heat. And if they get it wrong, I've stayed out. And again, the way I look at my entries, I really rely on my entries to keep me out of the shit as well. Sorry for the crass language, but I like to keep me out of trouble. And that's what I think is one of the most important things about your entries. if your entries are set up in such a way that you've got confirmation of buying pressure, or if you want to go long, or you set up on the short side, you've got confirmation of selling pressure, it keeps you out of trouble, because if you don't get that set up, essentially you haven't got the confirmation and you can be kept out of trouble. I mean, there's going to be times when you don't get the setup and it just goes on without you. Who cares? Because I think more often than not, it'll keep you out of trouble if you don't wait for the setup, and you just buy into it and then you turn around and get stopped out, or you're hanging on to some crap for the next year or so. That's where your setups are more important. Does that make sense, guys? Anyway, what was the other one? MMS. Sorry about that. Let's just reject that. Hope that's no one I like and anyone that's listening. Now, this is slightly different story. Just eyeballing this, that's a different story. And I mean, it's quite clear. We don't really have to look at the weekly, but it's worth looking at the weekly. I always like to take the step back up, because, I mean, another thing you can see, the daily is getting extended up here. It's getting a bit overbought. Doesn't mean it can't crack on with it and go straight up through resistance and just drag in some buyers and really push it on another 10%. So that's why I'm always taking a step back to the weekly charts and going, okay, the weekly's got a lot of room to move before it gets anywhere near, well, before it gets up towards overbought. So the weekly could be the one that could really pressure it to the upside. But either way, this here is pretty clear cut. It should be on the radar. I think this is a lot closer to being a trigger than the last one we just looked at. So you've got major support through here, major resistance we broke up. We've got this good trend up. You can see respecting high lows, high highs. It's in a trend, okay? Had a good vertical move here, and that's why you've got this type of contraction lower, but your anchor's way down here. So it could easily respect that. Respect this high low here. That's where you got your highlight. So you really are in a prime zone for this to break up. Now, if you drop it down to the daily, I think it's got a little bit more work to do before I'd be happy to buy it. Because at the moment, you don't know. There's been a whole lot of buyers in here, whether they're ready to get out or whether they're still buying. You don't know that just yet. And you're coming up into some previous highs around that 19. So that leg is getting a bit long in the tooth. This leg up, high highs, high lows, starting to get a bit long in the tooth. And you can probably see by this type of price action over the last few months that we're coming up into 19. People are starting to respect that. They're expecting that if I'm going to buy it here, how much further can this run? How much further can it kick higher? Am I willing to take that risk, or would I be going for something that's at the early stages of a move, potentially when it was down way back here, or off here, and preempting that break of that zone? Does that make sense, guys? So you just got to, again, it's adding a probability to the trade, or just trying to eyeball it, what kind of probability you can assign to it. And if it sets up, if you send a very high probability you've got a good trade, it's about your setup. Respect your setup and trade it. That's what it's about, I guess. If we just click on the daily quickly, I mean, if it breaks up through here, personally, I probably wouldn't buy it, to be honest, because I think it's got a bit of work to do before it. I would like to see it pull back. Ideally, I would like to see it flush out that low here. You can see this low at around 1710. I'd like to see it pull back, flush it out, have a deeper correction, but it's still holding a high low above 16, say 1675, thereabouts, even a bit deeper. And then if it starts holding a daily high low, then, okay, it's worth taking that punt. You've got minimum risk. You're still holding a longer term trend up. You've had a deep correction just to flush out a few of these buys. It's holding a higher low again, and you're going to be gunning for that 1775, 18 level and see if it can expand into new highs. Now, if you get that and it pushes up here and it can't expand, at least you've got something on this. You've got something, you could book some profits, or at least a break-even trade. Does that make sense? So it just means that your strategy, you're not going to cop it on a stop. You're not going to take a pure breakout trade. I always think it's better to refine it so you can get an earlier entry. An earlier entry to the crowd is either going to accelerate your gains, or it's going to minimize your losses. All right, that's probably about it, guys. I think there's nothing else to go over, was there? We went over the four trades. Let's just take a look at the XJA to see what that's doing. Oh, let's just go here. Was it that one? see what it's doing intraday. Still a bit of pressure on it. See, it's getting a bit, for me, this is getting a bit top heavy up here. You can see it's today. Accelerated up in the open, pulled back, built that high low, starting to grind up here, and potentially this is just this reaction off 59.40, this reaction lower is getting me a bit concerned. And then you've got up here, and you've got this reaction. We've nearly come back down to that low. I know we've just taken it out, but I'm starting to see more of a choppy market than anything else. And I think if you're going to buy into it late, it's not late in the day, but if you're looking to buy into it here, again, it's about assigning probability to your trade. How much probability that you're going to break up and through 59.40, considering the market conditions at the moment? Oh, I think it's quite a low probability. And if you go back to probably the 30-minute chart, we've still got a high low to, lower highs to contend. We've popped up here, we pulled back. We could just get choppy in here, actually. This is a major lower high. We've come back down, but we haven't got down to this low. We held up before we started lifting again. So I still think we're going to get chopped around a bit. We haven't really picked a direction just yet, even though we're up today. So yeah, that's my 2 bobs worth, I guess, on that. Anyway, any more questions, guys, before we'll probably have to call it a day there? One last thing before I forget. Monday's a public holiday in Australia. Sorry, what am I talking about? In Melbourne. Public holiday in Melbourne. So I won't be doing the stream on Monday. I'll be back in on Thursday. I thought we've got our family reunion from when we moved to Australia. So if anyone doesn't know, I'm a Kiwi at heart. I was born there. I think I came over here when I was about 3, so it's 41 years ago. So we're having a bit of a party with the families heading over on the Sunday. So I'll probably have a few drinks and stay over there on the Sunday night. So yeah, won't be doing it on Monday. It's probably going to be a fairly quiet day. I think Melbourne's public holiday. I don't know what other states are having a holiday. But yeah, we'll see. Anyway, I thought I'd let you know. Thanks very much for joining me, guys. Thanks for joining me. Hope you enjoyed that. And I hope you have a good weekend too. Linus. All right, look, bugger it. Let's do it. Paul, you got me, mate. Let's have a look at it. Ooh, that was a good last call, Paul. Yeah, I wouldn't buy it here because my risk would have to be way down at 170. For me, that's too much to risk percentage-wise. A little too much to risk. It is getting a bit overextended here too. And so and if you just look at one little thing, it's on its way up. Let's just, before we go there, look, come on, minimize. Look at the weekly first. The weekly it's definitely lifting off this 50 zone, 75. It really is starting to lift off that support, edging its way higher. Excuse me. So there's no doubt it's in a longer term uptrend. It's just whether this could expand. So if you're going to buy it here, you've really got to look at it and go, well, where's my risk going to be? Your risk for me would have to be way down here. It's too easy to get chopped out if you got your risk here or even a couple of candles lower. And the reason why I say that, we'll get rid of that. The reason why I say that, where's my chart? Oh, here we go. Is that we've got a high here. It wasn't broken by much before we had the big correction. We pushed and it extended. So we've gone off this low, extended up straight through it, took out the high, a big correction lower. So if you bought it up here on a breakout or even a breakout through here, where's your risk going to be? You'd have to put it down here. You did hold risk, okay, but if you held it up here, for instance, you got stopped out. And you might have bought it on this little rise here. Again, you got stopped out. So that's why I say it, and it didn't get through that high very much. And if you do the same thing here, if you extrapolate that out, it's probably got about 3 or 10 cents to go, potentially. Another 5 cents to the high, and it could easily run out of steam at 250 and then have another deep correction all the way back down to sort of potentially 190 or thereabouts. So you got to ask yourself, is it actually worth it? I would ideally like to see. We've had this move down, pop up, secondary move down. So if we just draw that up, secondary move down, big extension higher, big pretty much push lower, another extension higher. I would like to see, no, I want blue. I would like to see from here, if it does back off, I would like to see this type of thing. And then I want to see a sign of strength. And the sign of strength is meaning a bit of contraction at about that 50% mark. And if I see this type of thing, that for me is strength. And it's taken a lot of time, which has dragged in a lot of buyers. And then you've got a lot of this buying that could really squeeze it up and people start to chase it higher. That's ideally what I'd like to see on Linus. You know what I mean? To buy it just here, I think it's kind of, you know, for me personally, it doesn't match my risk, and I'm just analysing the last price action. That's all you can do. And I see this move up as being, you know, really, it's gone quite a bit from 180 to 250 without really any pullback. So I would like to see a pullback, and if it keeps going, again, I don't care, because there's going to be something else to trade. And just looking at where it is now, it's all conducive to that. Is going to run out of steam around that potentially 250. It's getting overcooked here. So how many more buyers are left to really start to drag it high and get this type of price action where it just goes bang straight up? Could be wrong, but we'll see. Anyway, probably call it a day there, guys. If you look at this, yeah. What was that on? You're saying on MMS? 20th to 10th, was it? Is what you're saying? Yeah. Look, and this is what Zeng was just saying here. You can see if we just mark that up, he's pretty much right on. So it's not. This is back to MMS, just what he was saying. So you've got this contraction lower. You can see that quite clearly. Then we had a run up. We sort of pumped down, a lower high here, pressed down, and then we started lifting. And you can see just through there, if you bought it on that breakout, that's a higher low. It was in overbought territory, but it's after this type of move. I mean, it did play out. It may have been a bit tougher to buy because you're right up in this overbought territory. Who's to know that's going to happen? It's just going to go bang, stay overbought. But with respect to price action, that price action, you know, from that price action, there's no reason why not to take that long trade. You've got this 1-2 move lower. It started to lift. It's a good little rally up here before it sort of consolidated through around that 15 mark, and it started edging higher again. So when you got that breakout to the top side, worth a trade, because your risk is just going to be, well, let's just draw that in a different color. Whoop. Say long through here. Stop just below there, because if it breaks up here and you're wrong and it retraces on you, maybe we're back down to retest, or we maybe start holding lower highs, press all the way down, but you can always get back in. But as it turned out, you know, hindsight's a beautiful thing. It did play out quite nicely. And you know, great return up there. Not so much. You can see it was actually quite a strong move up, to be honest. But yeah, the whole point behind it was this type of price action is what we're seeing. You know, that cup and handle, that curving back up after this leg up. You know, overall that leg up, that's about 50% from here to here. All right, is that making sense, guys? Anyway, better close it off there. Thanks very much for joining us. We'll be back in, well, I'll be back in. I hope you all are too, on Thursday next week. Hope you enjoy, if you are in Melbourne, hope you enjoy your day off on Monday. If not, too bad, you'll get one soon. Yeah, but enjoy your weekend, and I'll speak to you again on Thursday. Cheers, guys. Bye.